This quick demonstration of the Quant company accounts app. And this is how the app arrives. It's currently just loaded with the FTSE 100 companies, but soon be expanding to FTSE 250 and then the American companies as well. So what we got here is the list of companies in the FTSE 100, and we're ordering by the name of the companies. We can change the order to look at different things, but currently it's set to name, and that's how it arrives. So here we're looking at Anglo American. They are a mining company, and you can see that the tabs on the right-hand side is currently set to revenue. We can also look at balance sheet and sort of value as well. And so revenue, this is basically sales, profit, that kind of thing. And what we're looking for is a rising set of income, for instance, or a rising set of profits. And broadly, we're seeing that here with Anglo American. As you can see, it starts off with a neutral blue color. Next year, the revenue goes up, so we got a lighter green, and the next year it goes up again. And this is all good stuff. So we got a darker green. But then you can see the income comes down. So the color goes down to orange because we don't like income coming down. But then it boosts back up again. And so we go back into the green. So overall, that's a pretty good pattern. And you can see the score is set to 3 for that particular item. Profit, again, it's not a bad pattern there. Score's only 2 because it's kind of like leveled a little bit there before boosting at the end. Some of these things aren't quite so good though, although most of them actually are pretty good. So let's have a look at the balance sheet. And the balance sheet for the company, again, looking quite good as far as the fixed assets of the company are concerned. They're going up and continually going up, so that's all good. And the score is 7 because there's no dips. Intangible assets, okay, well, they're kind of like just staying fairly flat. Well, we can see that in the investments of the company are going down, which isn't so good. We like to see the investments the company's making in things going up rather than down. So this is actually going red to warn us that that's not so good, and the score goes down to -4. But we can see that the cash at the bank is going up, and we like cash. So as that goes up, that gets greener and greener, and that's all good. So you can see this balance sheet isn't bad. It's pretty good. And you can see that the score for the balance sheet for this company is 21, positive. That's pretty good. Now for valuations, this is based on the price of the stock on the day the app is packaged. And it's just a very broad guide, really. Don't take this too seriously, but it gives us some idea of how the value of this company is compared to other companies. So, for instance, Anglo American's got currently quite a good dividend yield of 6.55%. That's pretty strong, and so that's got a very good score, 33. Price to earnings ratio is 5. What's that, 6? So again, good score for that. Market cap as a percentage of income. Well, this is the total value of the company based on its share price. So share price times number of shares is the market cap. And what that is as a percentage of the income of the company. And it's actually 140%. And that's pretty good, because what that's saying is that if you just took the income of the company and times it by roughly 1.5, well, that would be the total market cap of the company. And that's what we're seeing. So that's pretty good. Other things, a little bit worrisome, but not too worrisome. A little bit worrisome. Dividend cover is 165%. So they're covering their dividend, but it's not like a massive cover of the dividend. But then that's probably fairly standard for a mining company. Usually mining companies do give away a lot of their profit as dividends, particularly the large mining companies. So that's kind of that's how that works. So as you can see, the scores are fairly good. Now, what we can do is we can actually order this list by the revenue or the balance sheet or the value. So let's have a look at it ordered by revenue. So what that's saying is that Admiral Group at the top has got a very good revenue figure. So I have to move back to the revenue tab over here. And yes, it does look very good, doesn't it? Lots of green, which is kind of like what we'd expect. And that one's at the top. But if we took one that was fairly near the bottom, let's have a look at WPP. So they're a recruitment company, I think. Anyway, so their revenue, as you can see, is dropping off, and that's not good. So yeah, they've got a little bit of a rise in 2021, but generally that trend is coming down, and we don't like that for income, obviously. But if we look at the balance sheet for WPP, well, again, it's not great, but it's not the worst in the world either. And we look at value, yeah, it's not great value. Lots of red there. So that's ordering the companies based on revenue, but we can also order based on how the balance sheet looks. And as you can see, a company like Taylor Wimpey, which is a building company, they've got a very good balance sheet, which building companies often do. They don't tend to have an awful lot of debt. But you can see that, sorry, we're doing this by balance sheet, so I'll put it onto balance sheet. So as you can see, the balance sheet is actually, well, for property, it's fairly stable there. And intangible assets kind of going up, kind of coming down. But other things like investments going up, inventories going up, total assets going up nicely, and then net assets going up, share capital fairly stable, retained earnings, nice, going up, total equity going up, shareholder funds going up. So it's all looking good from the balance sheet point of view. So they got a strong balance sheet. But they've also, if you look at revenue, now they've got quite good revenue as well. Not bad, lots of green in there. And value, lots of green in here. So Taylor Wimpey looking like a good value company, really. So we're on balance sheet again, order by balance sheet. So if we look at somebody who's got a bad balance sheet, not such a good balance sheet, we go to balance sheet tab. Again, see Vodafone Group, lots of orange, lots of red, not looking so good. But for revenue, yeah, not so bad. So it depends how we look at these things, whether we're interested in the revenue, the balance sheet, or the value. And in this case, the value is not too bad. Bit of green, bit of red. So that's the ordering by balance sheet, but we can also order the list by value. So what companies are the best value? And Taylor Wimpey up there again, good value. Aberdeen, Barclays. So if we look at Barclays are obviously a big UK-based bank. And it's telling us the value is one of the best. And if we look at here on the value, well, yeah, it is. Everything is green, apart from the debt as a percentage of income, which is 58%. So, yeah, a little bit worrying, but not the worst thing in the world. And the score is only -6, so it's not terribly bad, that. But lots of this other stuff is very good. So it's got a good dividend yield, good price to earnings ratio, excellent dividend cover. It can cover its dividend by, 600%. So all of this is showing good value. If we hop to their balance sheet, okay, pretty good. Lots of green, not bad at all. Revenue, yeah, pretty good. So as far as the value goes, it looks like a good bet. If we look at something that isn't so good, let's take AstraZeneca. AstraZeneca are an interesting company because they're a lot of it's a bit of a growthy company. I think that's fair to say. Pharmaceuticals, very popular stock, but because it's a popular stock, obviously the value suffers. And as you can see, there's just lots of red there on the value. But on the balance sheet, very strong, good balance sheet, very strong balance sheet. Obviously a few worrying things there, but if we look at what they are, they're on current borrowings, so that's debt that's due soon. Yeah, okay, quite high. Non-current borrowings, very high, really. So it's on the debt side that there seems to be a worry here. But on the revenue side, not too bad. That's good, going up nicely. But there's lots of things in there. The profitability looks like it's not great. Um, so that's kind of like looking at it from the value side. So basically, why do we do this? Well, we're looking for a start. We're just looking for things that are good value companies if we're thinking of buying shares, I guess. So, but what we're looking at was looking in the rear view mirror. So we're looking at what the accounts were last time the accounts were published, and the accounts may not have been published for 12 months. So this information could be looking at a previous year, or previous, in this case, previous years here. We're looking at, so if we look at Anglo American, the last thing we got is for 2021. We haven't got any accounts for 2022. So we've got to bear that in mind. We're looking in just historically, and it's a way of just checking how companies looked the last time they published their accounts. So it's real information, hard information, and it just adds to our knowledge of companies when we're thinking of investing. So that's all there is to it really. Have a look at the app. It's free, and that's about all there is to it. Thank you.